The administration of Munir Gwazo, the Director General of the Securities and Exchange Commission, has been pursuing the implementation of the Capital Market Master Plan that was launched in November last year under the regime of the then head of the Commission, Ms. Aruma Ote. Well, yesterday, a council made up of some leading men and women in the capital market was inaugurated to oversee the Master Plan implementation over the next 10 years. Joining me now to speak more on what the Roadmap Initiative has achieved in 2015 and the outlook into 2016 is Mr. Tunde Kamali, the Deputy Director and Head of International Relations at the Securities Commission. Good afternoon to you, Mr. Kamali.
Good afternoon, Harriet. Thank you very much.
It's great to have you on the news. It's exactly a year ago now since the 10-year Capital Markets Master Plan was formally launched. What has been achieved in its implementation?
Yeah, thank you. At the launching of the master plan, we articulated some of initiatives which we believe are low-hanging fruits, but which at the same time would have considerable impact on the market. And among this was the new minimum capital requirement, which deadline was September 30th. We also launched the e-dividend mandate system on July 29th, while the NIPF, which is the National Investors Protection Fund, and the Corporate Governance Scorecard were launched yesterday. Further, we have a few others which are still on course. And among these, we have the new complaints management system, we have the electronic filing, the direct cash settlement, and the dematerialization of share certificates. So far, this is how far we have gone.
Now, Mr. Kamali, could you just give us an idea, give us a sense of the task ahead, in particular for the new year 2016, now that this council has been formally inaugurated?
Yeah, well, to start with, the council, the Capital Market Master Plan Implementation Council, is meant to give directive guidance and also do advocacy for the implementation of the master plan. And for 2016, what we have done is to continue in the series of the low-hanging fruits, which we believe and are already having a considerable impact in the market. And among these, we have the reduction of transaction costs. We also have the direct cash settlement, which will mean when you sell shares, your return goes straight into your account. And this is meant to take off on the first working day of 2016. We also have the improved listing of companies on the exchange, while we hope to also work on easing the access of SMEs to the capital market. In addition to that, we're looking at strengthening the commodities market and also introducing the unified licensing model, as well as the adoption of GIPS for fund managers. And by GIPS, I mean Global Investment Performance System. These are the initiatives we're looking at for 2016.
A very comprehensive plan you guys are looking at there. But then, are there specific aspects of this master plan that requires the necessary attention and probably the action of the federal government in order for it to succeed?
Yeah, especially looking at the initiatives we have for next year. The very first, which we believe we would need the government, and which in other growth in emerging markets like ours are driven or is driven by the government, is the listing of multinationals on the exchange, because this might require the granting of incentives in the area of tax and on other areas, and we would definitely need the government to support us in this area. We're also looking at the demutualization of the stock exchange, which we have started, and we expect by next year to seek government's understanding. And this relates especially to the legislature, because the CAMA, as it is, presents a little challenge in a few of the provisions, and we believe the legislature should support us to achieve the demutualization of the exchange.
Tunde Kamali, thank you so much for joining us on the news today.
Thank you very much.